I have passed 4 $100,000 FTMO challenges, and I used FTMO to quit my job back in 2021 and trade full time. I earned over 5 figures in payouts before starting my own prop firm, Lark Funding, 3 years ago. And in today's video, I'm going to break down for you how I analyze the market, how I implement fundamental analysis. And I'm doing so because after running a prop firm for over 3 years, I have seen time and time again why over 90% of traders routinely fail. And it is because they only rely on technical analysis and they don't understand why the market is moving the way that it is. So I have been posting these daily videos on my channel to help you better understand what's going on in the market. And today is another one of those videos. So to recap what happened yesterday, things continue to look ugly across the market. The Federal Reserve is worried. Tech stocks tanked. The New Zealand dollar is falling out of the sky. But there is a shining light amongst all of the pain. We're going to look at a trader who has made over $386,000 shorting Palantir. We're going to look at some specific stocks. Trump buys $100 million in bonds, and the Coinbase CEO says Bitcoin is going to $1 million. Now, what does this have to do with prop firms? Don't worry. As I break down all of these catalysts, all of these news events that are going on in the market and throughout the world, I'm going to explain to you what this means for the market so you can make better trading decisions. And as a result, you'll get one step closer to passing your prop firm challenge. So to recap yesterday's numbers, across the board, we are down. The NASDAQ 0.67%, S&P 500 0.24%, Dow Jones completely flat. Bitcoin did have a good day, and don't worry, we are going to pull up some technical analysis charts. In fact, we're going to do that right now because I want you to see how things were actually a lot worse earlier on in the day than the numbers suggest. You could see here, the S&P 500 was down. It was over 1% at one point before we rallied back up. The NASDAQ was even worse. This is the ZQQ, the Canadian Equivalent Index Fund. We're down from the all-time highs at the lowest 4%, but then we rallied back up. You can see we broke this 200 moving average, and now we're retesting it. As for Bitcoin, you could see we continue to bounce off the 112,000 support area. So what you need to know is that things were looking a lot worse than how the day ended. But why is this? Again, if you're just relying on technical analysis, you're only getting a small fraction, maybe 20% of the entire picture. It feels great when the market rallies 100 pips off of your trend line, but if there's a big move taking place across your technical analysis point, because something in the real world is actually taking place. And that's what you need to understand if you're going to position yourself accordingly. So overall, you could see here, lots and lots of red throughout the market. Here's the deal. All three indexes looked ugly yesterday. Earlier in the day, things looked much uglier. Things, however, turned around. Why? Because Trump lit up Twitter and X on fire, demanding that the Fed Governor Lisa Cook resign over mortgage allegations. So Lisa Cook works at the Fed. You can see here all kinds of headlines of Trump saying that she must resign on fraud claims. But I believe later on in the day, she said she was not going to resign. So the plot there is thickening. But on this news, things did slowly start to turn around. But tech still got smacked. Apple down, Meta down, Amazon, Alphabet, all red. Intel fell 7%, and Intel has been in the headlines all week because the Trump administration wants a 10% stake in the company to have more domestic chip manufacturing. And then traders are stuck between profit taking and AI hype and the Fed drama show. So what is going on? If you don't follow the news, it can probably feel overwhelming. There's a lot of moving pieces. Ultimately, what's going on is we are shifting on a lower time frame from risk on to risk off. Now, as a trader, you always need to understand what the vibe is in the market. And the vibe, that word is just a casual way of saying, well, what's the risk sentiment? Are traders and investors around the world, are they looking to take on risk? Or are they looking to take off risk, take risk off from their original positions to take less risky positions? So just to summarize, the riskiest assets would be tech, crypto, right? But the safest assets are going to be, stocks in the Dow Jones. It's going to be holding the dollar. So if the US dollar starts to rally, it's because we're seeing a risk off environment. Same thing for the Japanese yen. a safe haven. So when things are bad, think COVID 2020, what happened? We had a huge flood into the dollar, huge flood into the yen and other safe haven assets. And that's what's happening right now. So when you go to take a trade, you have to ask yourself, well, is this trade in alignment with risk sentiment? Because if it's not, if you're trading against the news, it might be the reason why you've been losing a lot of trades, why you haven't been finding the consistency or the profitability in trading that you want to see. So overall, the Munch take, there's a Pip Munch email. 25,000 traders receive this email every morning, 100% free. You could subscribe to that down below. I own it and I do most of the writing. The market's nervous system is tied directly to Fed headlines right now. Any shock equals an outsized move. Keep one eye on Powell's Jackson Hole speech Friday that's coming up, maybe the other eye on your stop loss. So this is the most important thing that happened yesterday. Everybody around the world was waiting for the Federal Reserve's meeting minutes, which gives the market a closer look at what the Federal Reserve is thinking in terms of monetary policy, aka fifth grader reading comprehension. What's going on here? Is the Fed going to cut interest rates? Donald Trump wants them desperately to cut interest rates. If they do, it's going to lead to a weaker dollar, but it's very good for stocks. It floods the market with a whole bunch of money. So what actually happened? Well, the big quote of the day was, many see inflation risk outweighing employment risk. The Fed's July meeting minutes are out. Big picture, they're worried about inflation and jobs. Most agreed that it is too soon to cut rates, and that's why we saw that sell-off in stocks today. Remember, the market wants those interest rate cuts, but two governors, this is interesting, two governors actually voted for cuts, and it's the first time in 30 years that we saw this kind of division. And the markets reacted fast. The odds of a September rate cut on Polymarket slipped to 68%. So just go back 2 weeks before last week's controversial PMI data that came in at 2.7%, showing that inflation and manufacturing is still kind of hot. It was at 90% the odds. For today, the odds on Polymarket were over 70%. Now they dropped slightly to 68%. So are we going to see a September rate cut? The market's not sure. The odds are only 68% right now. So the easy money crowd is sweating. Remember, rate cuts equal easy money. Why did everything go up after COVID? Because interest rates were at zero and the market was just flooded with cheap and easy money. Why it matters, this is the most important thing for traders right now. You have to understand what is going on here. It is what is driving the market. So it's so important to understand. Rate cut hopes are what's been propping up risky assets. So why do we have this AI bubble? Why is crypto doing so well? Why are growth stocks doing well? Look at Palantir, right? It's because everybody has been front running those interest rate cuts. A hawkish Powell speech Friday that's coming up could send tech lower and strengthen the dollar. The DXY was pretty much flat all day, but if we go on a higher time frame on the 4-hour chart, you can see we're really consolidating here. The market's unsure about what's happening, about what's going to happen next. We need to keep a close eye on everything that's going on here. There's going to be amazing opportunities to make a lot of money, to pass a lot of prop from challenges, and to get those payouts. But if you're not aligning yourself with what the market's doing, you're going to get in trouble. For all the Forex traders out there, the New Zealand dollar is a risk-on currency. So remember, when the market is looking to take on risk, when things are optimistic, things are looking good, investors are going to go into the Kiwi. They're going to go into the Australian dollar, the Canadian dollar as well. But right now, the New Zealand dollar is getting smacked. Why? Because the Royal Bank of New Zealand just cut interest rates by 25 basis points to 3%, which is the lowest that it has been in 3 years. So remember I said earlier, if the Federal Reserve cuts interest rates, it's going to lead to a weaker dollar. That's exactly what happened with the New Zealand dollar. They cut rates and it is weaker. So you have to burn into your brain this correlation. Higher rates, stronger currency, bad for stocks. Lower rates, lower currency. On top of that, why are they cutting rates? The domestic economy, weak. Inflation, not that great. And job market is soft. Add to that China slowdown, plus USD strength, and that leads to Kiwi flightless. Okay, so why it matters? It matters if you're trading the New Zealand dollar. This will also have, a ripple effect on the Aussie dollar too, since those two economies are so closely interconnected. So the Munch take, if you're trading FX, watch Euro New Zealand very closely, New Zealand US dollar, and the Jackson Hole fallout, which is coming up on Friday. Really, really important. The Kiwi might keep sliding unless global growth miraculously perks up. Are we going to see a recession? You're not seeing a lot of those headlines yet of everyone talking about, recession, but they're there. I don't want to say they're on the back burner because they're slowly brewing. But if we look at the valuations across the S&P 500, things are frothy right now. Things are really, really valued at extreme levels. If you look at the valuations in 2000, right before the crash of the dot-com bubble, the valuations in the S&P 500 are now above pre-dot-com bubble valuation. So that's something to keep an eye on. If you clicked on this video because you're familiar with FTMO, I'd love it if you were familiar with my prop firm, Lark Funding. It is prop trading minus all of the nonsense. So I've been adamant on this channel talking about how I think the direction that the prop firm industry has moved in 2025 is negative. A lot of prop firms are introducing prop firm challenges that are way cheaper, but they're cheaper for a reason. They're cheaper because they're impossible. They have nonsense rules that hurt traders, rules that might lead to you failing. Whereas if you just took an honest prop firm challenge, you might have actually passed. We're talking about consistency rules, news restrictions, tons of minimum trading days, low payout and reward splits, just a whole bunch of nonsense. Whereas Lark Funding, we've been running for over 3 years now. We're really growing rapidly. We've already crossed $500,000 in prop firm payouts. We're quickly approaching that $1 million mark. As you can see here, no hidden rules, no consistency rules, over 3 years paying, and we do have that 10% max drawdown level on our 2-step challenge. So if you're looking to take a prop firm challenge, we'd love to have you over there. And there is probably a discount code somewhere, depending on when you're watching this. August 10 will get you 10% off. Let's get back into the value. So I do not trade options and puts, but this has been going viral on Twitter over the last few days. It's this guy who has been shorting Palantir. You could see it is really having a rough time. Yesterday or today, it only dropped 1.10%, but over the last 5 days, it's down 15%. Now, this is nothing when you compare the year-to-date performance of over 100% return, but the valuation is a joke, right? It's diabolical at over 500, the PE ratio. And so somebody has actually put their money where their mouth is. Everyone online is saying, oh, it's so overvalued, but this guy is actually putting his money where his mouth is. This is day 3 of put positions where he is up a total of $380,000, which is insane. It's motivating, and honestly, it's just straight out incredible. So to break it down, a quick refresher: a put option is a bet that the stock is going to fall. You pay a premium, and if the stock tanks, your put's moon. You make a whole bunch of money. So the upside is that you could have huge gains if you nail the move, but the downside is that you could lose your entire investment. So he has just absolutely timed this to perfection with this 5-day drop of 15%. So he's timed it absolutely perfectly. So again, I don't trade puts, I don't trade options, but this is just motivating to show what's possible in the trading world. This guy has made multiple 6 figures in 3 days, which is just, I used the word diabolical, 30 seconds ago, but this is really diabolical. Let's take a look at a couple of things of what's going on across the market, because again, you don't have to trade Google, you don't have to trade Target, you don't have to trade Amazon for this to be important to you, right? You have to take in, as a trader, as much information as you can, and you have to discern it. You have to understand, why is the market moving the way that it is? Answer that question, and then you can ask yourself, is it going to continue or is it going to change? And that answer is going to give you an opportunity to make money. So you need to understand what's going on. You'll understand risk sentiment better, right? And then if you do trade stocks, well, these could also be opportunities. So Google dropped today the Pixel 10, so it's their new phone. The price tag $800. If you want the fancy foldable, it's $1,800. The market didn't seem too optimistic about that. The stock dropped over 1%. Target has been in the news a lot lately. Target is really struggling as a business, down 6% today alone, because their earnings showed that sales are slipping, traffic is slowing, and even online shoppers are spending less. They have a new CEO coming in February. He's going to have a very tough job. Target is a very important stock to watch. Again, it doesn't matter what you're trading. Target is a good one to watch. Walmart is a good one. Costco, because it's going to show you consumer sentiment. If Consumer sentiment is a leading indicator on how the economy is doing. You have leading indicators and lagging indicators. A lagging indicator being, the unemployment rate, right? People lose jobs only when things start to get bad. Whereas the first cracks in the economy would be, well, hey, people aren't spending this much money at Target, as an example. And so this could be a leading indicator of, people tightening their wallets, tightening their belts a little bit. Amazon rolled out a new Prime membership for 18 to 24-year-olds, $7.50 a month or $69 a year. That's pretty interesting. Market didn't love it, down 1.8%. Lazy Boy, I thought this one was really interesting. Got rocked down 12% today. They had their earnings and it was just really not good at all. So shocker, the economy's soft and so are their earnings. So again, these are sort of leading indicators. Another interesting stock, probably the most interesting today, is Estee Lauder. And so Estee Lauder, they sell makeup, and they were in the news a lot a couple of months ago because Michael Burry, his only position at the time, I think this has changed, but his only position at the time was a huge position in Estee Lauder, and they tend to do really well when there's a recession because people no longer travel, they tighten their wallets. But funny enough, they'll splurge on makeup, right? People who can't afford to do something fancy, they'll say, well, to make myself feel better, I'm still going to go out and buy some makeup, buy some lipstick and whatnot. But their stock is down 60% in the last 5 years. So either, this could be a really interesting deep value play or deep regret, depending on, what's going on. Thursday motivation. Speaking of FTMO, this trader on Twitter posted an insane payout of $138,000. So again, this goes to show if you're struggling as a trader, I've been there, 90% of traders are there, but it is possible, especially with prop firms. There has never been a better time to become a trader. Literally never. I started trading all the way back in 2016. So it's crazy to think that, almost 10 years ago, I started trading. And at the time I was trading a small personal account, trying to flip a $500 account. Maybe if I was lucky, a $1,000 account, after working, extra hours in a summer job. And it was just brutal. It was so hard. You have to flip the account and it's basically impossible. You need money to make money, and that's where prop firms come in. So if you're struggling, just realize, I have no idea who Thomas George Binder is. Congrats to him. But I would have to imagine, he probably struggled a lot when he was starting, probably doubted himself, but he kept pushing through. And look, $138,000 in overall payouts from FTMO, which is just absolutely insane. So congrats to him. Keep this in the back of your mind if you are struggling. A couple of other things that made headlines. Trump has bought over $100 million in bonds since taking office. So this kind of made, medium headlines today. He spent at least $100 million in bonds since taking office, as well as purchasing debt by local governments, school boards, and gas districts. Trump bought corporate debt issued by Meta, Home Depot, and T-Mobile. So this is sort of an interesting thing to, read about. And again, it doesn't have to necessarily impact your day-to-day trading decisions, but the more you read about this stuff, about what's going on in the market, you're going to have a better knowledge base, and you're just going to become smarter, and you're going to make better decisions, and you're going to have better opportunities. Coinbase CEO said he thinks Bitcoin is going to $1 million. Love that. That's really cool. This technical analysis setup is scary. Let me actually pull this up. This is on the NASDAQ, I believe. QQQ, we have a problem. This huge ascending wedge formed, and we've now broken out of it. So does that mean we're going to drop from 565 to 400? Nothing's guaranteed, but it's something to pay attention to. This has 75,000 views. My signals say we're okay. That is so funny. The price of beef is absolutely insane. The price of beef is rising. And then quote of the day, let's actually see what this guy is. Quote of the day: your mind is tricking you into thinking backtesting creates certainty, and that certainty guarantees success, but that's a fallacy. And I could not agree more. It's controversial to say, but I think backtesting is a waste of time. Most traders fail because of poor trade execution and poor emotional management. And neither of those things improve with demo testing, with backtesting. So backtest warriors and live market soldiers. So I really, really love this visual. I think it's worth, thinking deeply on today. And then a couple of memes, everything in its right place. This one's so viral online, and it's just so funny to see a desktop like that. What if $124,000 was a cycle top and there won't be an alt season? McDonald's worker, I feel you. And then a little Palantir one. So guys, ultimately, this is how, as an FTMO trader, as a prop firm trader, prop firm CEO, this is how I think about trading. My ultimate goal is to always know what the market is doing before I even open the chart. I don't want to be playing catch up. I want to know what's driving the market. What are the smartest people in the world, the largest hedge funds, the largest institutions? How are they positioning themselves? How are they thinking about the market? How are they thinking about the economy? That's not to say that technical analysis isn't important. It absolutely is. But technical analysis is used to refine my entries. How do I know if I want to buy and sell? How do I know what asset I want to trade? It all comes down to reading this and understanding what's going on. So if you think that, this shift to risk off is going to be medium to long term, there's an insanely good opportunity because you could short a bunch of stuff and make money. That's if you agree with that. Whereas you might think, this is just going to be a short term pullback and then things are going to go back to all-time highs. Well, then if that's true, this is still a phenomenal opportunity because these are all pullback. You'll be able to get in on some buys and ride the wave. That's for you to decide, but this is how I go about thinking about the market. So I hope this was valuable. Let me know if you have any questions, comments, insults in the comment section down below. I'll see you tomorrow. Cheers.